This is your LMAX exchange technical update for Monday, November 20th, 2017. Euro dollar. So when you're looking at the euro dollar chart, the market has put in a head and shoulders top recently, but there's been no follow through thus far, or limited follow through, with the market only trading down to 15.55 ahead of this latest bounce. So the market needs to figure it out. Resistance comes in by that right shoulder of the head and shoulder top at 118.80. A break back above that level would pretty much negate the formation and suggest that the market's ready for a resumption of a clearer uptrend in 2017. At the same time, while the market holds below that right shoulder, there is a possibility that we stall out here for a resumption of these recent declines and a continuation of a correction in 2017 that could take the market back down towards a eventual 112.30 pattern objective. For now, support comes in from last week's range high that was broken out from that previous resistance turn support at 16.90, below which would expose 15.55, and on the top side again it's 18.80. That's the key level to watch above. Sterling dollar. So cable has been confined to a range trade going back to pretty much early October, and the market needs to see a break above 33.38 or back below 30.27 for a clear directional insight. Although, as we continue to say, the market did break out in 2017 above 27.75 to suggest that we're seeing the formation of a longer term base, which means that if we do see the market break down below the 30.25 area low, setbacks should be limited, and the greater risk ultimately should be to the top side. So a pushback above 33.38 would be a stronger development, suggesting that the market is looking to continue this uptrend in 2017 back towards the 2017 high that was seen back in September around 36.60, and through there towards 140 further up. Dollar yen. So dollar yen on Monday, it's going to be important to pay attention to 111.65, not whether we break it or not, but whether we close below the level. A close below the level will give the confirmation needed to suggest that this market is looking to resume this trend, or take it more seriously. This trend, well, this range trade that we've seen the market adhering to for pretty much the most of the year, and a close below 11.65 would then suggest that the market could be poised for a more significant decline back down towards the range bottom and 2017 low there, which is at 107.32. That's back in September. At this point, it would take a rally back above 114 to take the immediate pressure off the downside. Euro Swiss. Euro Swiss has been trading higher over the past several weeks, and over the past few months the market has shown some constructive developments in 2017, breaking above the 110 psychological barrier and then above 112, another important level on a medium to longer term basis. This sets the stage for a continuation of gains up towards that previous critical support that had defined the market as a base up until January of 2015 at 120. And so 120 is the focus to the top side. Look for setbacks here to continue to be well supported, ideally now in the 114 area, with only a break back below 112 to compromise this outlook. Aussie dollar. So Aussie has been clearly trading in a downtrend over the past several weeks. This is since the market actually put in a 2017 high just back in September, a plus 2-year high too, above 81. The focus now is on a drop towards the psychological barrier at 75. Any rallies here should be well capped, ideally well below 79 for a lower top and continuation of declines. At this point, it would take a break back above 79 to take the immediate pressure off the downside. Dollar CAD. So dollar CAD looks like it could be poised to continue its recovery out from those recent lows that we saw back in September, those plus 2-year lows below 121 and just shy of 120, market getting down to as low as 120.62. And so now it looks like the market could be looking to put in a higher low ahead of a fresh upside extension, which will be confirmed on a break back above the recent high that we saw, that recovery high from the 31st of October at 29.17, above which would open the door for an immediate retest and potential break of the psychological barrier at 130. Kiwi dollar. So last week we saw the market trade down to a fresh 2017 low. The market had been supported initially just ahead of 68, matching the May low, but after a little bit of a bounce, the market was content on continuing lower, breaking to a fresh 2017 low below 68. And now the focus goes back to lows that were seen all the way back in 2016, in May of 2016, at 66.76. Here, rally should continue to be well capped. Only a break back above the 71 handle would compromise the current downside pressure in Kiwi dollar. SPX 500. So the S&P 500 is deferred to a bit of a chop right now, but overall the uptrend remains firmly anchored here, and the market could be poised for fresh record highs, certainly while it's holding above 25.44 on a close basis, which is the most recent relevant short-term support. Of course, we would probably need to see a break below 2,500 at a minimum to suggest that this market could be in the process of putting in some form of a top. Until then, there is risk for continuation of gains and a continuation of this record run beyond 2,600. Gold. So gold has been more or less supported over the past several months, putting in higher highs, and support has been almost trying to put in higher lows, although we've seen that compromised at certain times, but ultimately setback supported over the past several months, and it looks like the market could once again be supported in here ahead of 1250 in favor of that next upside extension and continuation of gains in 2017 back towards the 2017 high that was seen in September at 1357, and through there to test the 2016 peak at 1375 further up.